Welcome to this video where we'll be taking a closer look at the Greezly Bot Pro Expert Advisor, a trading robot that has shown steady growth over the past few years. In this review, we'll answer the question on everyone's mind: should you buy it? Stick around to find out. All right, so for this video, I decided to take a little bit of a different tactic. So as you know, if you've ever been to the MQL5 market, there are trading signals that you can subscribe to. And often those trading signals are actually a result of some sort of, expert advisor. Not always. Sometimes they're actually just someone's trading, live, so to speak. But a lot of times they're an expert advisor. So what I did is I looked at the market, and let's go down here to where we've got some signal providers here. And I was looking for something that was, of course, an algo, an expert advisor. And I saw this one here, the Greezly Bot Pro, I guess from Ivan. I'm going to probably butcher this name, Marushak. So I took a look at this. So if we just click here, we got the Greezly Bot Pro, and it's shown steady, I guess fast growth here at the beginning, tapering off, but overall it looks pretty good. So if we go down here and we look at, the start, the growth, and we go here and we look at the balance. Now, this is actually interesting here. So we've got and then the balance, and it just drops off like that. So let's take a look here. It looks like we have balance, average, withdrawals. So it looks like that is okay. So that's what we've got here. So, all right, well, let's take a look at it. So we've got, looks like 3,503% growth. So this is our growth, our average. This is our balance. This fast drop off here looks like, if you look at the legend, that's a withdrawal. So looks like the owner of this account decided to draw it down, take some of the money out that they've earned. And again, we see this. Now, the other thing I always like to look at in looking at equity is, what were the drawdowns during this time period? So if we look at it, we can see some fairly large drawdowns. I mean, so 6%, 10%, and then, somewhere around 5%, and, so on and so forth up until here in 2023. So not terrible, not great. I mean, 10% drawdown is 10%. So that's fine. But he's had a really nice equity curve, which is great. So let's go back and look at the robot itself. So if we go back here and look at the robot, about the robot. So what does it say? Automated Trading Advisor says best results are on the Euro USD pair. Use a time frame from 1 minute to 15 minutes. So the expert advisor trades using the averaging method, smoothly and safely increasing the volume. Okay, so what does he mean by using the averaging method? Well, basically it's a martingale strategy. So what that means is that you make a small trade, like let's check 0.01 lots, for instance, which is actually quite small. And if you win, you win. If you lose, not if you lose, But if you go into drawdown, at some point in that drawdown, the expert advisor is going to open another trade in the same direction as the first trade. So if the first trade was a buy, then you're going into drawdown, 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 and some number of points or pips later in drawdown, it opens another trade. And usually it's going to be the same size or one slightly larger because it's a progression. So if you continue to go into drawdown, then it's going to open yet another trade, a third trade, and then a fourth trade, and a fifth trade, and a sixth trade. And each time it's going to make the trades bigger and bigger and bigger. So if you started at 0.01 lots, the next trade might be 0.02, the trade after that 0.03, 0.04, 0.05, 0.06, 0.07, and so on. So the theory here is that eventually the market is going to turn and go back the other direction. But what we'll see when we're looking at the visual tester is that the take profit for all of the open trades gets modified such that if price hits that take profit, all of the open trades will be closed, the negative equity will go away, and you'll come out with a small profit. It's actually a pretty cool strategy as long as it works. The problem is that sometimes it doesn't work and the market keeps going in the wrong direction. And as these trades get bigger and bigger and bigger, your account, the possibility for blowing your account gets higher and higher and higher. So we'll talk about some ways to minimize that risk in the future, in the future part of this video. But anyway, let's get on with it. So here we go. Smoothly and safely increasing the volume. Okay, it's fine. Okay, to direct the trade, the EA uses candlestick analysis. Now, he doesn't tell us what kind of candlestick analysis that he's doing, which is fine. And then he says here again, the safest option is to use 0.01 lots for every $1,500 to $2,000. Well, I will say this, in my estimation, that's actually bad advice. And we'll get to that point when we look at the strategy tester. But what I found is that use 0.01 lots for every $10,000 you have in your account. Or you might just blow your account with this expert advisor. So he's got a couple other things: reduce risk, change the step after 4 trades by 300 pips and after 6 trades by 500 pips. What he's talking about here is, as the trade goes in the wrong direction and you're going into a drawdown, you're going to want to let the EA open, after so many pips in drawdown, open the next quote averaging trade. So, and that's fine. And then, okay, this conservative advisor with 14 years experience. Okay, cool. I guess he's talking about himself. Consider the recommended deposit based on the desired yield. Okay, that's also good advice. 10, there will be drawdown and trading. This is normal. The robot will skillfully exit them. This takes time. And that's true. Using a martingale strategy, if you have a losing trade, it might be some time, and some number of trades later that all of those trades get closed into some amount of profit. It's very, very true. So this is all good advice. The only thing I actually disagree with here is 0.01 lots for every $1,500 to $2,000. I did some testing on this, which we'll get to, and I would highly recommend that you not trade. Well, I wouldn't trade this particular expert advisor with 0.01 lots unless I had 10 grand to trade. I just absolutely wouldn't. So, but we'll get into the reasons why, and we'll go from there. Okay, so I've actually already run a simulation with this particular bot, and here's where we got. So we have the. Oh, actually, I want to point out one more thing. We look at the comments. He has a setup file that he posted at the beginning of 2023. So let's go back to the here. So if you look here, he's got a 300.set file. Not sure why he called it 300.set, but doesn't matter. So what I'm going to do when I ran the simulation is I used his set file to run the simulation, because he said this is fully working settings for tested settings for 2022. So great. So back then to the strategy Chester. Okay, so we've got from the market the Greezly Bot Pro 4.0. We've got we're going to use the the pair that he recommends. We've got the 15-minute, and I'm going to do my normal 3-year testing, 2020 through 2023. And let's look at the expert properties. All right. So these are the inputs to the Greezly Bot Pro. All right. So we have constant true. We have our starting lot size, risk percent. Not really sure. Actually, didn't see any explanation for what that's for. Then we have take profit. So here it is in points. So the take profit here is set to 50, which is going to be 50 points, which is going to be 5 pips. Then distance between orders, it says 300, so that's going to be 300 points or 30 pips. So if you're going into drawdown and you hit, 30 pips in drawdown, is going to open the next order. And then here we have the max number of trades is 30. And then you have a equity max risk. Now it's set to false. So because it's set to false, it can keep opening trades until your account's basically gone. That is possible. Now, you could set it to true and limit your risk, but then that also defeats to some degree the strategy of martingale. So anyway, we'll get into that. And so if you turned it on true, then you could say, okay, I only want to risk 50% of my account max. And then when it hits 50% in drawdown, it would just close all of the trades. All right, that's fine. All right, so we've got all of that. Just going to cancel since I've actually already run the simulation. And let's take a look at our graph. So here's our graph. So we've got, we start out here with, basically $10,000. And we see steady progression, up, and so we're making what, we're $2,431-ish in profit after 3 years. But what we see are these spikes downward. A big one there, a big one there. So what are those spikes? So let's take a look here in the results. So let's go down here. So basically what we're looking at is trades and, profit loss. So on that, the normal trade, when it wins, it makes 50 cents profit every time. If we get into a situation where you lose, where it goes into drawdown, then you can see here we've got two trades, one of which is negative, one of which is positive. Together they make, in this case, looks like a dollar in profit. And we can go down, but further down, as we go further into the history here, we can see here is a progression of losing trades. So here's like the first one, right? And then it opened another trade here. And then it opened another trade here. And then it opened another trade here and another trade here. And you can see, let's start off with, 0.01 lot, 0.01 lot, 0.01 lot, 0.02, 0.03, and then eventually it turns into profit. So all of these trades together, when they closed, made a small profit. And you can see here, they all closed at 1.06166. So they all closed at the same time, right? So that's martingale. So we look even further down here, we should see some bigger numbers. We can look here. Right, so here's one. So here we've got 1, 2, 3, 4, 5, 6, 7, 8 trades, right? So 0.01, 0.01, 0.01, 0.02, 0.03, 0.04, 0.05, 0.08, and then you got into profit. You can see that they all closed at the exact same spot. And in aggregate, all of these trades together made a profit. So when you take a look at the graph, that's what you're seeing. These are cases where you had a succession of losing trades, increasing lot size as well as it went down, and eventually the market turned back just enough for all of those trades together to make a profit. Then let's take a look at the report. So here's the report. Let's take a look here. In this scenario, in this 3-year period, our max drawdown was $2,227. So, and that's starting off with 0.01 lots. That is 0.01 lots, the smallest size you can possibly do with any Forex broker. But yet, the drawdown was still $2,127. So what does that tell you? That tells you that if you had a $1,000 account and you were running 0.01 lots in these 3 years, your account would be gone. A $2,000 account would be gone. A $3,000 account, not quite gone, but you'd be 60%, 70% drawdown. So you can see why that the 0.01 lots for every $1,500 or $2,000 you have in the account is wrong. I wouldn't do it. I would not trade with this expert advisor without 10 grand. I just wouldn't do it. Because you have a high probability of blowing up a smaller account or going into a large drawdown. Now, the other thing that we have to look at here is, okay, it took 3 years on a $10,000 account to make about 25%. So you're making something under 10% per year. And Well, okay, why? I don't think we're all in here. I don't think there's anyone here watching this video is looking for less than a 10% return per year. So we've got that. Except if there's anything else interesting in here. No, not really. So you've got that. So I think the next interesting thing actually is to go ahead and, oh, by the way, just this particular simulation took almost 15 hours for 3 years on the 15-minute chart. That's a really long time. So I did this so that you don't have to. Now, I want to get into one other, I guess, negative for this particular expert advisor is it's MT4 only. So, MT4, that's probably one of the reasons why it took so long to simulate, is that MT4 is actually much slower to execute simulations than the MT5 strategy tester. Well, I guess it is interesting that we did 3,823 trades. So that's a lot of trades. So it does show that this particular expert advisor has a reasonable expectation of profit. If you can handle these points of big drawdown. And it's also possible with a martingale that the market just keeps going in the wrong direction for a long time, a really long time, in which case it will blow your account. But, if you watch the account, you aren't risking money that you can't afford to lose, you can get steady growth here. Anyway, so let's get back to visual mode and let's get this started. Where is... All right, so here we have it. So we're starting off. We have a buy trade. We have our take profit, which we can see is 5 pips. And the market is going in the wrong direction. So let's watch what happens. So what happened is we had a buy trade. This is our original buy trade. Actually, let's do this. Properties, show grid lines. Let's turn it into candles. Let's make it a little bit bigger. Okay, so we had our original buy trade here, and then we can see, looks like we're, oh, for whatever reason, it didn't open a trade here until 35 pips had gone by, and it opened another buy trade, and then the market went in favor, and between these two trades we closed with $1.01 in profit. So let's see if we can see another one play out here. So here we have a sell. Okay, that one made money. That one just went into profit. Looks like we had another one go into profit, and now we're now for whatever reason it's decided to make a buy here. Let's see what happens. Okay, that buy won. And so we have a sell. Okay, those went into profit. Got another sell. Take profit, take profit, take profit, take profit. So what do we have? We have a buy now. Okay, that took a profit. We're into another buy. All right, so we've got a buy, take profit is still up at the top. See what it does next. So our market is still not where we want it to be. Okay, we've opened two more buy. Well, looks like another buy with a 0.02 lot size. And look, so here you can see, because you can't see my finger in front of it, but let me move my mouse. You can see that what's happened is it's moved the take profit for all of the open buy trades to here. So what that means is you've got a couple of 0.01 buys up above that are basically in drawdown, and you have these two buys. This one's in profit, this one's still in drawdown, but the aggregate of all of the open buy trades, if the market hits this red line right here, it'll close in a profit. So let's see what happens. Well, it goes in the other direction. And we open another trade. Here we're doing buys of 0.04. So if we take a look, let's see how far, approximate distance between these. So right around 300 pips, okay? Just like our settings. And runs and runs and runs. At some point, it's going to close all of the trades. All right, so we can see here. Oh, I think it actually did close all the trades. Yep, here we go, right here. So you can see all those faint, I guess, blue, purple lines. All of the trades from the previous set of trades all got closed right here for a profit. And then for whatever reason, it decided it was going to take a sell right up here. But anyway, I think that's enough on the strategy tester itself. All right, so here we go. So the Greezly Bot Pro Tester. So I wrote down a couple of things, a couple of negative things, a couple of positive things for this particular strategy tester. So I guess I think I've already mentioned it earlier, is that you can easily blow a $2,000 account even with the smallest lot size possible. It's probably not good for trading challenges, and the reason being is that you could have a very large drawdown starting at any time. And not only that, most trading challenges you need to make 10% or 8% in 30 days, a month. You're not going to do it with this trading robot with the 0.01 lot starting trading size. And if you increase that, you might be able to get your 8% or 10% in a month. But the problem is you're also just as likely to blow the challenge very quickly if it starts into a drawdown. And the other thing is it's $625. I'd call that relatively expensive for what you get. And lastly, in the cons, it's MT4 only. There is no MT5 version of this particular trading bot. So I'm not a big fan of MT4. I love MT5 much, much, much better. But anyway, it's MT4 only. On the pros, for a larger account and risking a small amount, like 0.01 lots, 0.02 lots, depending on the size of your account, you're likely to get steady growth. Is that guaranteed? Absolutely not. 100% not. Even with a large account, unless you turn on the, I guess, the drawdown, unless you turn on the drawdown protection, your account could go to zero. I guess there's actually one more big con here, one big negative, and that is that it trades without a stop loss. That in itself, and there's not even an emergency stop loss that's like 100 pips away. There's no stop loss. So if you have a lot of movement in the market, your account could be gone in seconds, minutes, hours. What if you had another Ukraine war start? Some sort of news event like that, and if you've got you're in drawdown and you've already built up a number of large lot size trades that are on drawdown, and all of a sudden the market just goes whoosh, your account could be gone because there's no stop loss. So anyway, all that aside, if you're putting this into money putting money in that you can afford to lose, you don't mind slow, steady growth and some relatively large drawdowns, this could be an okay expert advisor. Would I buy it? No. Not for $625. I just wouldn't. And the other thing is, the other reason why I personally wouldn't buy it is it is with the settings that I used, 3 years, 25%. That is not enough growth for me to put $10,000 into an account and let it sit there for 3 years for just $2,500. And I wouldn't trade with higher lot size. I just wouldn't, because even with a $10,000 account, trading a higher lot size could really, really lead to some really big drawdowns and possibly blow the full account. So for those reasons, I don't really recommend this bot, but it's not a terrible bot. It's not a total loss. It does make money, or it can make money, or at least it's shown in the past that it can make money. So yeah, that's a plus. Anyway, good luck out there and happy trading.